You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome back to This Week in Futures Options, a program here on the Options Insider Radio Network where we do exactly what the name implies. We break down the week that was in futures options, some trading activity, of course, from a volatility perspective, open interest, new volume, some crazy trades of the week, breaking down the volatility skew, all that cool stuff here on TWIFO. This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. TWIFO, just one of the latest additions to the network, of course. If you're coming in the TWIFO now for the first time, you're saying, hey, this show's cool. I want to go back and check out some cool stuff, some cool other episodes. Maybe they dove into a product that you guys like to trade. You know, maybe it's silver. We did that recently. Could be beans, hit on those quite a bit. Could be gold. Could be FX. Whatever floats your boat. Chances are we've hit on it, or we will soon. In which case, you can check out our archives. Easiest place to do that, theoptionsinsider.com. Or, of course, you can get them over there, iTunes, TuneIn, Stitcher, so on and so forth. Of course, if you're available, we also love to welcome you to join us live every Friday, 3 p.m. Central, 4 p.m. Eastern, via the Mixlr app there. That's MIXLR. We tweet out the link. We also put it out on Facebook. And you guys can, of course, if you have a Mixlr account, you can just follow us there and be instantly notified whenever the show is live for your streaming pleasure. And we welcome you guys to ask questions there, or via the old-fashioned way. Could be social media, could be email, however you like to get your cues in for us. Maybe we'll have time for some of those today. We've been so jam-packed with products lately, we haven't had a chance to get to your feedback. Hopefully we'll get to some today. But first, let me welcome on my cohort, my partner in crime, my friend/nemesis, Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here called QuickStrike. Nick, welcome back to TWIFO, This Week in Futures Options.
Hey, man. Back in the saddle, not out in the grassy fields for soccer tournament. So I'm at the desk, and you won't hear in the wind in the background or parents chattering about how great their kids are today. It's just me in the old office. So looking forward to it.
We're losing some of the soccer ambiance, but we promise to make up for it, listeners, in all sorts of fun product categories. Let's spin the TWIFO wheel. We actually need a wheel, Nick, so we can just spin it and have all different products on it. We can just kind of land on one and dive in. But I think in lieu of a wheel, we'll just use our own sentiments to pick what we want to talk about this week. And, when we first created this program, you and I were thinking, we talk a lot about crude. Crude is kind of really the genesis for this, the just explosion of interest in crude and all the retail interest as well, just kind of everyone really getting into crude. And so we talked a lot about crude, kind of have gotten off of it a little bit of late with some of the other products kind of jumping to the fore post-Brexit. But crude back on our radar again. It wasn't so much tons of underlying movement, just more of some interesting developments out there. Crude has been kind of a weird contract to watch of late, Nick, because it had, of course, for a long time, it was kind of just the entire story of crude was puts. People were just loading up on puts, crazy handle puts all the way down, 30 and below. Obviously, that was kind of prescient for a while there. And for doing it for quite a long time out into the future, 6 months, a year and a half and beyond. Then, of course, we saw some near-term rallies. We saw calls finally get a little bit of life back to them. And now looking at the crude skew again, it's back to mostly puts. The calls, of course, in the near term is a little bit more call heavy, but still overall, we start looking out beyond to the end of this year and into the beginning of 2017. Seems like pretty much puts are leading the charge yet again, indicating at the end of the day, the kind of net concern, the net interest, and net speculation still to the downside. People wondering if all the pull on crude is going to bring it back down somewhere maybe south of the 40 handle again. Looking back at the week that was, again, listeners, you guys, if you want to play along, not just with streaming, but actually generate the report yourself, look at the data we're looking at. You can do it right now. You can do it real time. You can do it completely for free. Head on over cmegroup.com/TWIO, this week in options, and you can click on that and see exactly what I'm talking about right now. Just pull up WTI and you can follow along with us. All the products are there. You can see that it was a very active month in the near term, active week in the near term for crude, with the SEP contracts really leading the charge. About 3/4 of the paper, Nick, out there in the front portion of the curve in SEP. So really, really active stuff out there. Again, indicating a lot of near-term froth here in the old crude contract. The most active contract, again, kind of putting exactly what we're talking about here, the concern to the downside, even though these are kind of more at the money than downside, but they're close, are the SEP 45 puts leading the charge by a mile. 30,000 of those bad boys going up this week. So just a ton across the board. Overall open interest up about 8% this past week. And of course, with all this interest in the puts, not surprising that we see that old 50 delta risk reversal going out across the months, up pretty substantially. A lot of that, of course, being the activity of those 45 puts, but also just across the board. The 40 puts were active in October. We saw the 45 puts active again out there in Dece. So it was pretty much puts leading the charge across the board. And as a result, that skew jumping up about a handle or more, or vol point or more, really out across the board in a lot of these months, which is kind of interesting. And Nick, it's been fun to watch crude of late. It's certainly been one of the more active contracts, and certainly one that still generates a lot of top line interest from people. So I know you've been watching crude pretty closely this week. What's been catching your eye out there?
Yeah, I think the one thing I made notes of that you can see in the doc we're sharing as well, and what's not going to show in the report right now because the August contract expired about an hour ago. Still tremendous amount of trade in that front month, and we talk about it, and that's August. Like I said, it expired today, and you see mostly closing positions there. So there was a lot of trade in the 45 put in that August contract as well, and you just saw people were generally closing down, and some of them were rolling into the next month. So I think some of that 45 put action that you were talking about was people translating their position from the August to the September. So still. Again, I'm going to ask the question I ask it every time we talk about crude is why does that front contract trade so much when we have less than a week to go, but we can't seem to get those weeklies to show up on the volume board so much. So still waiting to see what happens there and to get some good answers as to why people tend to ignore those shorter dated options on the next trading future. So yeah, lots of volume in the August contract as you would expect, and I think what you're seeing there, 42 through 46 were the volume leaders, but again, people closing and rolling into the next contract. September, we saw. Again, like you mentioned, the 45 puts were the leader from a volume standpoint, but there was also a lot of action in the 50 through the 55 calls, and they're not going to show up so much here. But Mark, if you click on the SEP 45 put in the most active volume column, you're going to see the window that will show. And listeners, you'll see that pretty soon. We'll be able to click on a column and get the detail around the most active, not just for that particular strike. A lot of action in the 50 through the 55. So still some people looking to see what's going on, see if they can get some upside options there, as well as about 27,000 total traded in the 70, 72, 73, and 74 calls. And those are all mostly opening positions. And a lot of that action took place on Tuesday. So for me, that I know there was something, I believe it's called the tulip numbers or something. I was trying to get some help with what exactly that was from Shy Girl out there, who is my go-to person for crude oil information. Maybe we'll have her on the show at some point in the future. Over on Twitter, she puts out a lot of good information, but a lot of action on the upside. So you're not necessarily seeing it so much on the report snapshot, but definitely people playing with the calls in the SEP contract. And then out in December, there's some odd strike action as well. A lot of, we had put action down into the 20 strike, 20, 25, 30, 35, and 38 strike, with the 38 strike having the largest change in open interest. So, even though we still have skew to the downside, meaning we have a negative number in that 25 delta risk reversal, mean put volatility is over the call volatility, and we still have put call ratios in the volume anyway this week that are tilted toward the puts. But overall, on the open interest, we see generally a pretty flat number. We're seeing, when we say flat, we mean one. We put open interest over call open interest, and generally speaking, we're around one. So just from an overall sentiment, it looks like people are sort of, even though the skew curve doesn't necessarily represent sort of an even bias from an open interest standpoint, looks like people think we can go either way. And just looking at the range of the trades in the crude, we're not really moving around too much. We're in a 46 or 45 to 51 range, which is not necessarily that big given the ranges we've seen in the past. So a lot of interesting action also in the D's contract in the 55, 58, 60, 65, 70 strikes. So in both the SEP and D's contract, we're seeing some wide strike trades. And it really seems, I don't know about you, Mark, but it really seems almost next to impossible that we get up into that 70 handle, but who knows? But there's trade out there, and 27,000 in the SEP contract out there in the 70 handles, it seems pretty significant. So, like you said, basically a flat week. The vol's off. We've talked about it before in the past. Vol was low, but it could go lower. And again, we see the same thing. We saw the skew pick up a little bit. We saw the calls get a little bit of a bid, but vol's off. If we trend, people are disinterested. No numbers or no inventory things that are really going to drive this market. You're going to see sort of a sideways trend, and vol's going to come off, and it'll be interesting to watch.
Yeah, I'm looking at those numbers right now. And again, listeners, you can do that yourself. So cmegroup.com/TWIO and click on them there. And you're right, 72 calls, 6,100 going up this Tuesday alone, and about 7,000 of the 70s going up. I wonder if that was a vertical or something along, pretty tight vertical though. Either way, total about 7,800 of those going up this week as well. That I don't know. We have some other candidates for the crazy trade of the week, Nick, but expecting crude to go up that much, that far, that fast. I can see inevitably that's how markets work, right? These calls get cheap enough, someone's going to want to come in and gobble them up. 72 is a little bit optimistic for my blood, but hey, I've never been as big of a crude bull as some others out there, so perhaps that's my bias sneaking in there. But yeah, I might be up there. I don't know. So I think we have a nominee. I'm not sure if that's the winner, Nick, but I think we have a candidate for Crazy Trade of the Week. Do you concur?
Yeah, that's definitely a candidate, and those are really tiny. Those are probably $10 options up in that higher strikes. So again, it's always, I kind of wish I was a fly on the wall where those are trading. So if people are, and they're openings, so it's not like they're covering to get out because they got so cheap because they traded at some point in the past. It's somebody did something, and I'm always curious as to why that's the case. So I'll do some investigating and see if I can answer those questions on a show coming up in the future.
Well, we got one candidate. Stay tuned, listeners, to find out if that is indeed the winner of our Crazy Trade of the Week, or if we have more. Hint, we have a few more in store for you. Let's shift off crude now, head on into where we started last week. Kind of an interesting surprise addition to the show last week. It was for all the lycanthropes out there maybe covering their ears right now. Going to go back into silver and up again this week. So it's kind of been interesting to watch kind of just the continued movement out there in good old silver stuff. If you want to find it, again, TWIFO page, and then click on the precious metals there, and you'll get access to all that stuff, or just find silver there. You can follow along there as well. And been another interesting week, kind of in some cases, a bit of the opposite of what we saw in crude, with just vol coming off aggressively, multiple points across the board here. Nick, kind of no surprise, things were a little bit juicy last week. Some of that coming in, skew also coming in fairly aggressively as well. That 50 delta risk reversal, as you like to call it, 25 delta risk reversal. It's a bit of a half a dozen one, 6 the other. 25 deltas on the put, 25 deltas on the call, adds up to 50. So I add them up. Nick chooses not to do that. That's his right. We each have our own viewpoint on these things. Skew also off fairly aggressively, about a handle or so across most of the months, a full vol point pretty much, which is pretty aggressive for silver skew. Again, kind of evenly spread out volume in the first couple of months. It's not all aggregated in the front term of August. As we're talking here, it's about evenly split between Aug and Sep, about nearly 40% and about 35 or so for the Sep. So a little bit of an interesting breakdown. Silver, a smaller volume contract, so you're going to see smaller blips causing more changes out there. Open interest up about 5.5%. So that's a gain of only about 5,000 contracts. This is obviously a much lighter volume product than when we're talking about crude or some of the other big volume products that we talk about. But still a lot of interesting stuff out there. And still the narrative is still on those active months. The interest is still in the call wing, the 21 calls in Aug and the 22 calls in September, leading the charge with 1,700 and 1,200 contracts respectively. So that still is where the interest is. Has been kind of interesting to watch, just kind of these boom. Silver always kind of the bit of the stepchild to gold. Gold always gets all the love, all the attention, clearly all the volume, mostly in the gold side as well. But this week, kind of interesting from a silver perspective. I don't know, Nick, anything catching your eye out there in the realm of the other shiny stuff this week?
Yeah, I mean, I think you made a good point. The bias is still towards the calls, and that's both on the volume trade as well as the general open interest. So as much as the market's been up, it's been 3 weeks now. I only look back last week and the week prior. So we've been up 1 of those weeks significantly. So still people thinking that there's some upside movement available there. You just keep watching those kind of flyer strikes. The 22 strike traded and the 21 strike traded. Nothing, and there definitely was some smaller trades in higher strikes out there in the SEP contract, 23, 23 and a half, 22 and a half, 24. And again, not a tremendous amount from a volume standpoint, but when you look at that volume in relation to the open interest in that contract itself, the percentage is generally significant. So, I have to keep telling myself that when I'm looking at this stuff to say, oh, there's not much there. It's 1,700 contracts. But the reality is 1,700 on an open interest that started at 17,000, that's 10%. So that's actually pretty good. I always come from a biased background when in the Eurodollar pit where, every local was excuse me, 500 up or 1,000 up on spreads and stuff like that. So I have to always temper it and always force myself to look at the volume in relationship to the open interest. So we'll keep an eye on it and see what happens. We had some 25 calls straight out there in the D's contract. So, there's still, it still looks like people might be looking for some upside there. But again, as we look at those calls trade, like we say, we look at the volume, we look at the ratio and the put call ratio on there, calls bias on the volume side, call bias on the open interest side. And but we did start to see some of the skew. The skew was very big to the call side the prior weeks, but it has come off as well with the other skew. And generally that can mean one of two things. That's going to either mean that, and I'm going to take a look to give a better answer. It's going to mean either that the calls decreased in their volatility value, or the puts increased. So it looks like from our standpoint this week is it looked like the puts were fairly steady where they were, meaning they were still sort of cheap to the at the money, but the calls came in. So, we had that run up. People took some of the premium out of that volatility on the upside, and the skew looks like it came in, but it's really just the calls coming in with the puts pretty flat.
Speaking of skew adjustments, let's also touch on the other shiny stuff, which is gold. Hit on it a lot last week, not just on this show, but on Volatility Views as well. It was getting very call heavy out there. I don't care where you looked. If you looked in COMEX Gold, if you looked in the big GLD ETF that a lot of you guys like to play in, and they're both pretty good analogs of each other. GLD, one of the better, commodity replicating ETFs out there because it holds the physical, doesn't deal with a lot of the roll and yield issues that a lot of other ETFs have to deal with as a result. So interesting stuff out there. And we were talking kind of how just call heavy it was and just rich it was. And this week, a lot of that coming off fairly aggressively. Vol off over a point across most of the months. And of course, that risk reversal also coming in fairly aggressively, which is kind of interesting, off about a point or more, a full vol point out there, which from a skew perspective is kind of interesting. It's been kind of interesting to watch kind of the narrative of gold. It seemed like it was very heavy to the calls. We're seeing a little bit more life to the puts, even though, like I said, those numbers are coming in. When it gets talking about skew and some of these commodities, it gets to be a little bit confusing. A lot of people have this, in their mind, kind of the reflexive notion of skew, which is the equity version, which is the puts lead the calls all the time because that's where the elevated volatility is from an investment skew perspective. But in commodities, it's kind of pick your poison depending on the product and depending on the trading cycle and the month and the paper flow in that product in that given week or month, because that's how the skew is going to shape up. So it's always a little bit more of a delicate dance when you're talking about skew, which is why that quick skew tool that Nick was talking about is really pretty cool stuff. He's hoping to make that available to more of you via the CME Group platform. So you can click on it and kind of just see exactly what's going on, not just net skew, which a lot of people can talk about, but also what happened in the call wing and the put wing independently, because they move independently. They do their own thing. Then we kind of net them together to make this kind of one skew number, and that doesn't really work that way. You kind of have to see what's going on independently. So, Nick, I know you have that fired up over there, which I think you can give us a bit of a rundown here on the gold quick skew. About half of the volume out there this week in the big shiny stuff coming in that front term, again indicating perhaps some near-term fluff, some fury, some interest out there in the AUG contract, kind of winding that one down. Seeing about, again, the volume leader again this week, props indicating some of the change in the skew out there. The 1,300 puts lighting it up with 8,200 contracts this week. So very, very active contract indeed. And of that trading, it seems like it was fairly evenly split throughout the week. It wasn't one big day, one big pop. We saw nearly 2,500 trading every day, Tuesday, Wednesday, and Thursday, and then a little bit today, a little bit on Monday. So pretty aggressive volume and pretty even volume out there for those 1,300 puts out there across the board. Anything else catching your eye out there in gold, Mr. Nick, and anything lighting it up from your quick skew perspective?
Well, yeah, actually, it's pretty interesting. Like you mentioned, the volume seems to be the front month, which is 10 days left. It seemed to be pretty flat put call wise. In fact, even one put call ratio. So basically, just trade around the money there. And the others September through December, which is where we generally focus, since the most of the trade is going to occur in the first few months. And open interest again is kind of in line with where the volume is. But yeah, I think a couple interesting things here. If you look at it, we were not. I'm looking at quick skew, and I just actually tweeted the September quick skew chart. So if you're listening now, you could take a look at that. But what's the date? Back here on the 23rd of June, we had the widest range between the call and the put from the call was basically 20% rich to the at the money, and the put was basically 8% cheap to the at the money, and that's the widest it's been in comparison to each other. So as a general width apart from each other, and the quick skew will show that. As it's ever been, and that's come in quite a bit. It's quite significant where the put has moved more towards at the money from volatility terms, and the call's moving more towards at the money. So that's why when you look in the report and you see the skew is only about 1 or 1.5, that's a 1 vol difference from the at the money. It's really the call was really 1 vol over the at the money, and the put is generally close to being flat. The call's 1 or 2 vol, and the put is like 0 to 1 vol. So you're seeing a change in the sentiment here a little bit in terms of what the skew curve looks like. So what used to look like a big slash from the top right to the bottom down, with the calls being bid and the puts being offered less than a month ago, and now seeing something where it's almost to the point of looking more like a regular. And I'll pull up the skew chart right now for September. It's not quite flat yet. There's still a bias to the call side, but you're getting more towards a regular smile here. So it'll be, again, depending on how we continue to trend here. The gold is this week is off 28. Today it was pretty flat. So but it seems like as we trade in this range again, the vol's coming off again after being up because of moving back down into known territory, and the skew is basically coming, almost back in line with each other. So this was a good one for quick skew because it really was able to show us, you really got to see, and if you look at the chart out there, you can see how the fluctuations, how the calls cross the puts and that type of thing back in January, where the calls and puts were basically on the same volatility level in comparison to the at the money. But so we definitely are seeing the quick skew in action here, where we can take a look and see how the skew is changing in relationship to each other for the call and the put. So I find that pretty interesting. So we're starting to see these skews, these kind of warped skews, flatten up a little bit. So kind of fun to watch.
Yeah, this is really fascinating. I'm playing around with it. We retweeted it, so if you don't follow Nick, and you should, it's at QuickStrike1 on Twitter. Just no C, remember, QUIKSTRIKE1. He tweets out all that cool stuff. We'll retweet it for you too if you follow us. But you should check it out because it shows how that quick strike stuff, or quick skew, does really break it down and make, especially for something like this where it's a little bit confusing exactly what is going on with this skew number. This chart breaks it down graphically and makes it a lot more sense. You can see the puts catching the bid. You can see what's going on with the calls, how they've been coming. They're actually coming in to kind of meet each other, which is kind of interesting. Something you don't get, and I haven't seen that on another platform, which is one of the reasons we like having Nick on here, because he brings some cool tools to the fore, which are interesting for you guys to play around with. And again, you're going to get your hands on that quick skew, easy for me to say, stuff pretty soon. But before we get on to some, I want to get some quick feedback on here too, Nick. But I know you're a big lover of all things rates and 10-year. You spend a lot of time in the euro dollar. So I know a lot of things have been catching your eye out there. Still a little fluffy out there, a little frothy post-Brexit. Now here we are pre-Yellen again. I can't believe we're talking about the freaking Fed again, but c'est la vie. She seems to never want to go away, her and her team. So they continue to add some vol to the rates complex. So what's been catching your eye out there?
So I think if you look at the report, you're going to see over on the strike future and volatility side, you're going to see a lot of red. Okay, so you see the at the money strike has changed, obviously, because the futures are down. So in the last week, we hit a low in 10-year yield, a low yield. And now we've come back off that low, or we moved up away from that low in terms of yield. So the futures are off almost 2 points this week alone. So what looked like a run to zero interest rate environment last week and at the end of last week and earlier this week, and I think because we're off mostly today, we're off like half a point. So really kind of normalization of that market again, from sort of this, hey, we're going to run up into this zero interest rate environment. And again, remember, we talked a little bit about some calls that traded in the 10-year that were way up there, that basically put the 10-year rate at 1%. So those don't look like so much such a good idea anymore, just based on where we are from underlying standpoint. But vol's generally pretty steady here this week, and the thing I think that catches my eye the most, and it was pretty flat last week, the 25 delta or the 50 delta risk reversal, however you want to look at it. The skew is generally flat. So to me, when I see that, and you start looking at the where things are trading, that basically says people aren't sure now. It becomes a trade, right? You have a regular looking vol curve. You have the calls are bid the same level over the at the money as the puts are bid, or they're flattish to the at the money, depending on how far you go out on the curve. So I think now you're getting into a really sort of a range trading environment here, and you can start to think about putting on some positions that might take advantage of the fact that the curve has sort of moved back into, for lack of a better term, a normal look, or a look that we're used to. So just from if we look at the quick skew numbers, shows that the 25 delta risk reversal is basically flat to the at the money. So that means the 25 delta call and the 25 delta put are around the same volatility as the at the money, and then the 15 delta call and put are a little bit more expensive than the at the money, which makes them more expensive than the 25 delta risk reversal by comparison as well. So in this case, now you can start to see, well, do I want to maybe trade, get short at the money to buy that 25 delta call or put, because typically one is bid over the other. So we can start, it becomes, I think, where you can start going through your regular sort of trading scenarios and see if you like something, and see if you want to put any spreads, or maybe you want to take advantage of buying two of that 25 delta call or put and selling one of the at the money. So we see if there is movement again, that you take advantage of the fact that the vol might pop one way or another depending on which direction we go, or maybe you sell that the money and buy the wings, right? So you get short that iron butterfly. So I like when things sort of move back in line, because it shows you that they move back in line after being out of whack. So it gives you confidence to make that decision to trade when that curve gets a little bit goofy, or it looks like it's a little bit away from where it usually is historically. So that's kind of the biggest thing that's catching my eye right now, is you're going to get really a normal looking smile again. And then of course, I think this is candidate number 2 for our crazy trade of the day. We had October, which is the V contract here. If you're out there looking, it basically had no open interest going into about 12,000 open interest going into this week, but it quadrupled its open interest, and most of that open interest came from the 115.5 put, which is essentially 2.5 yield percent points away from the at the money. So that was a really big move on the downside. So that traded 24,000 times this week, and we missed it last week. It traded about 12,000 last week, but that's all an opening position. So to me, that seems like a pretty good candidate for crazy trade of the week. And now remember, when you go down in strike, that means you're going up in yield, right? So that's up in strike is down in yield. So we had calls trading that last week that showed that people were thinking we're going to 1%. Now we have puts that show that people think we're going up to 3 or 4%. So this is currently, this put is the biggest open interest position in the October contract. So for a contract to just start trading, a serial to just start trading like that, and for the biggest position to be some sort of wacky strike way on the downside, which we haven't seen in a while, I think that's a pretty good candidate for us here as well. And then just to kind of wrap up the treasuries, we're seeing the put call ratio is basically almost 2-to-1, meaning that puts are still sort of the leading the charge in terms of the volume, and it's pretty flat on an open interest standpoint. So again, that almost plays into what we talked about in terms of the shape of the vol curve. That's sort of, you have a general balanced look from an open interest standpoint on the call and the put side. So if you go look at the open interest profile report, you could probably see that as well. And then you're seeing a pretty balanced volatility curve. And the trade, however, is the volume trade is really where the puts are still biased, meaning more puts traded this week than the calls, but that probably got some of our open interest back in the line as well. So, and again, it makes sense given that we were up high in the underlying and people were, maybe playing the downside, and generally they seem to be right here. So I think that's kind of what we what I see here. And then, again, as we talk about all the time, the liquidity in this contract, the open interest was up over 200,000 contracts, which is over 8% again. So again, if you're looking for a trade, you're looking for the ability to find things that are very liquid. These weekly contracts today, one went off today. The week 3 contract went off today. It traded today alone 53,000 contracts, 250,000 this week. It had open interest of about 125,000. So you can get really short dated stuff, basically cheap, almost like trading a cheap future that's available all the time in this treasury market. So some good stuff out there. So keep an eye on it now, especially I think it's fun to start trying to keep an eye on these things that have normalized a little bit and see if we can track now that we've seen the skew kind of move back in line. Then the next time it goes out of whack, we can talk about it more specifically and maybe talk about things that we would do to take advantage of it going back in the line at some point in the future.
Yeah, those are all good candidates. I'm kind of mulling over in my head. I believe, what was it? Those were the 72 calls we were talking about in crude as well, for which our crazy trade of the week is. I like those, but you're more of a rates guy than I am, so I'll kind of defer to you on these ones if you think these are pretty. They're certain size wise, they're pretty big, and I can certainly see from an outlook perspective that level of yield being termed crazy as well. So if you're voting for these, then I think size wise they definitely win and certainly interest. I'll give an honorable mention to those SEP 72 calls and the 70s. They were both up there. But interesting stuff. So I think we have our winner, sir, for crazy. We should give out, if there was someone we could track down who traded it, we should give an award to these people for here you win our TWIFO crazy trade of the week. Speaking of crazy trades, there's been a lot of stuff cooking this week. Let's do a quick rundown, Nick, of the beans. Hasn't been a lot really going on, but people are still interested in that product category. So let's go beans really quickly. Kind of been range bound for the most part. I know you got some cool stuff you got brought out here with the quick skew. Our listeners can't access that yet, unfortunately. So why don't you break it down for them, what you've seen out there in beans land?
Yeah, like you said, market's been pretty rangy. It's down for the week, but most of that happened today. So you see that kind of drifting down. Let me pull up my report here so I can talk intelligently about it without so market's down, volatility's up, and the skew is up, right? So, and the put call ratio is reflective of calls being more in fashion, at least from a volume standpoint this week, than the puts. Overall, we're looking at a pretty even put call ratio. So the volume today is indicative of what the skew did, or the volume this week is indicative of what the skew looks like. So we were at a pretty wide skew, and I'll tweet this out too. Let me see if I can get this out here. Let me copy this and see if I could tweet this out. We were at a pretty wide skew from a quick skew standpoint, meaning the calls were rich to the at the money, and they have been rich to the at the money since we started to get that first run up in the beans back in May. Okay, and the puts have been depressed to the at the money, and the 15 and the 25 delta have basically been around the same volatility. So you've seen the downside has been pretty flat from a vol standpoint, and the call side has been kind of sloped up. But still for the skew to increase this week on a generally flat to trending lower week, that's pretty interesting. So we're going to, again, no real change in the at the money. Volatility is generally up this week across the board, even out into the 100-day contract, and the skew is up. So call buyers, high call buyers, 1,200 calls, 1,250 calls in the October and the November, as well as the front month in the August. So bias on the call side on the weekly volume. Open interest is generally pretty flat, and then volatility up. So for me, that it seems like vol should come in and the skew should come off, but we'll have to see what happens in these coming weeks. But yeah, I've almost felt bad for the beans because I feel like we've ignored them the last 3 weeks, when that's all we talked about prior to that, because it was so much fun and there was so much craziness going on.
No beans love of late.
No beans love. It's right. It's kind of a sad day for the beans.
That'll be our hashtag for the show. Hashtag no beans love. But speaking of no love, we haven't really given our listeners much love on this show in terms of answering your questions. We always run long like we're doing today. We're already along so many products to hit on, but I want to make sure we get at least one of your questions in on the show this week. So without further ado, let's hit a quick futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, a much unheralded drop there on the show. We don't get a chance to get to your questions that often, so let's see if we can get to at least one here, Nick, today. This one actually came in from Twitter. I think, Nick, you have the handle of this person. I don't have it here. Came through our multiple different accounts here. But they asked, well, actually, Nick, since you brought this one up to our attention, I'll let you run with it because you have the full context of this question and what it's applying to. So have at it, sir.
Right. So I basically saw on Twitter one of the people follow back and forth with each other. The question was, he said or she said, I'm not sure, you can't tell on Twitter. You can sort of maybe conject from the picture, but you never want to do that because you just don't know these days. But the question was, somebody saw, they said a short D's put traded 10,000 times and paper was buying. And the question became, how could a short put be bought by paper? And the way that you should be thinking about that, in the Eurodollars, if you go look at any report that's available on the CME Group website, you'll see in Quick Strike that we basically have the Eurodollar split up into pieces. So there's like a white piece, a red piece, a green piece, a blue piece, and then a lighter red, a lighter green, a lighter blue, and a lighter purple, and a lighter yellow. So it's whites, reds, greens, blues. That's a part of the yield curve that's trade. So whites is the first year, reds the second year, et cetera. And then the short, when I was in the pit, the first thing I traded was the shorts. We just call them the shorts. And that was the short dated contracts on the red portion of the Eurodollar future curve. So there used to be a long dated contract on those red curves. So those would be the really far out year and a half, 2 year contracts. And then there was a short dated contract. So we called that. So if there was a December contract, we called it short D's. So it was a shorter expiration, just like sort of the short dated stuff on the ags, but we called them mid curves or shorts. So basically, it's not a short position in the D's contract. It's a short D. So it's the short dated, means earlier expiration contracts that are trading on the red portion. So they call it shorts for that. Since it was the first one, people don't always say short red, but it's the short red December put traded one. So it's the short dated contract on the red portion of the Eurodollar curve in the December contract traded 10,000 times. So it's not a short contract. It's the short December or mid curve December. So again, depending on how long you've been around, you'll call it a short or you'll call it a mid curve, but the shorts and the mid curves are synonymous with each other in the Eurodollars, and then they call them the short dated options in the agriculture complex. So a short DC is, once again, it's the mid curve option or the short term expiration option contracts on the red portion of the Eurodollar future curve.
Yet another reason why Eurodollars are just so impenetrable to people on the outside. I'm glad you can walk people through that, Nick, because I didn't spend the time in the Eurodollar pit that you did, so it certainly is much more conversant to you. Great questions, everybody. Maybe we'll have to do a full listener question show one of these days. Then we have to shortchange some product, and people are going to get mad at us regardless. Hey, you forgot my product this week, or you didn't hit on this one, or you didn't get my question. So either way, we're getting people happy and or angry, Nick. But unfortunately, that's all the time we have for the Futures Options Feedback. It's also all the time we have for this episode of TWIFO. But before we go, there we go. There's that music we like. Before we go, Nick, fill our listeners in on what's coming down the pike in the land of Quick Strike. I know you're working hard to get this quick skew up for people, maybe give them an update on that, and what else you're working on over there in the land of Quick Strike. Remember, no C, just QUIKSTRIKE.
Okay, so thanks for that. So what we're looking at this week, if you take a look, probably Sunday sometime, we're adding a bunch of FX products to Quick Strike. That's on the free version as well out on the CME Group website. So we've split our FX into FX and then also emerging markets. So We moved the peso over the emerging markets, and then we added the ruble, the rupee, and the renminbi, all that stuff. We put all those into the emerging market sections of the FX product. So added about 6 things out there. We also split the metals. Now we used to have gold, silver, platinum, palladium, and copper. Now we split it into precious, base, and ferrous. So we added more base metals. We added the ferrous metals like iron ore, which is really important when it comes to tracking how, China is a big purchaser of iron ore when they're expanding, they're building a lot. And then we also have others, so uranium. So we have one like radioactive metal out there as well. And then also there's new COT report data out there for these new products. COT is Commitment of Traders. The CFTC puts out that report, or puts out that information every Friday, and our report is ready about 15 minutes later at 3 o'clock. So the CFTC COT report, we have a bunch of new products that we're covering there as well. And then I'll just throw out a little toss there. If anybody's interested, we do have in development some products, some ICE product coverage in QuickStrike as well. So there's not a lot of good reports out there, especially for the COT report for that exchange. So if anybody's interested or would like to take a look at that, shoot me a note over on Twitter at QuickStrike1, at QUIKSTRIKE1, if you're interested in getting access to our demo site to take a look at that kind of thing. So, and then also Quick Skew should be coming around the bend either in QuickStrike proper or as a report available on the CME Group website. We're looking to at least try to do some sort of short-term window so you could take a look and see how that works and get an idea of how to track skew as the market's moving. And finally, if anybody has any interest in seeing the ETFs in comparison to the futures, we've been doing some research over here to start trying to incorporate some of the ETF products like the gold and the USO and stuff like that and compare them to the futures to see if there's anything cool or fun that we can do with those things. So a little bit longer report than usual, but like I always say, go over to cmegroup.com and take a look at the freebies that are available from QuickStrike on their website.
Really quick here, Nick, someone asking, do you have that for live and feeder cattle? Do you have that on the QuickStrike platform, or is that coming?
Nope, we got all that stuff. It's all there. So anything that's liquid on the CME Group exchange, we are already covering in QuickStrike. So Dom, if you are listening, shoot me a note or DM me because we follow each other, and I'll hook you up or show you where to take a look at that stuff.
There you go. Managed to squeeze one last question in here on the show, so I feel better, not leaving the listeners out in the lurch. And on behalf of Nick and indeed myself, I want to thank all of you out there in the listening audience, of course, for downloading and streaming. Those of you who can join us live every Friday, we love to see you. You can always get the raw version over there on Mixlr after the fact. And then, of course, if you want to get the beautiful edited iTunes quality version, everything else, check us out that following Monday there on all those on-demand platforms or via optionsinsider.com. And on behalf of Nick and indeed myself, we'll see you next time right here on This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.